Hey everybody, so this is a presentation that I am borrowing from a fellow faculty member that is also teaching a professional development course, and our discussion yielded the fact that we have a lot of life stuff that we like to help students prepare for as they leave college and enter the world of being a functioning adult. And it's often stuff that just you have to figure out as you go. Now, many of you are probably thinking, really, Dr. Jensen, I am a functioning adult. I left the age of 25 a long time ago, and I know some of this stuff already, or I got this. This is not the time to hit the fast forward button just yet. There are some things in here that have to do with cost of living and how your dollars are being spent and your forecast for future earnings and some of these kind of things. So there are still some juicy things in here for you too. But if you find that there's an area that you feel pretty comfortable with, you can feel free to move forward in that area. But otherwise, this is a good place to sink your teeth into as far as getting all that extra knowledge and socialization as to how to navigate a very complicated world once it is not led by a teacher. So let's get started. So this essentially is called What is Next? Stuff I wish I listened to before I left the college bubble. So first of all, we have to talk about what are some factors that affect starting salary. Well, certainly education is one of them. Location is another, because the cost of living will often drive the earnings that come into play. So we've already kind of briefly mentioned in previous exercises that you should be looking at how the employment factors are going in your destination, right? Or the place you probably will be looking for work in the near future. Let's take a look at this. So this is from the Tax Foundation. You can find all kinds of charts like this, but this lets you kind of look and see what is the real value of $100 in your state. So what is your buying power? How far is your income actually going? So essentially, the more yellow or green you are, that means you're losing buying power. The darker blue you are, you're gaining buying power, okay? And if you're kind of like a sea green or turquoise in the middle, it's about even, okay? I apologize to those of you that may be colorblind, and this is a little bit difficult to see because these colors are very close to each other. But if you look at it, obviously California and New York are going to top the list, right? So $100 in your state really only is worth about $87 there, just because the cost of living is so high in those places. But then you have a few other states that might be surprising, and some of these are broken down over here for the smaller states that don't always fit on the chart neatly. So we have Washington, D.C. that's also incredibly expensive. But then you have other states such as Montana, Wyoming, Tennessee, Wisconsin, that you get a little bit of extra buying power because the cost of living is actually very affordable. So use charts like this to really think about your destination. And maybe this is about planning your retirement to see kind of how far your income can go. Or it might be about your next job or places you're considering working. And if you're really set on Silicon Valley in California, you might have to kind of prepare yourself for a wake-up call as to what your expenses might be. So I remember back in the day, I was looking at a job at University of California, Berkeley. And it was very common for faculty to live in studio apartments. So the salary looked really good that I was considering, but at the same time, the kind of lifestyle and how much living space I could have was very small because I'm basically living in the San Francisco/Oakland Bay Area, which is one of the most expensive places in the United States to live. So I had to think about that in terms of what comforts I wanted and how much I could afford. So again, what is the real value of $100 in your state? This is a good place to start as far as thinking about factors that affect starting salary. We often dismiss cost of living, but we shouldn't. Taxes. Yes. It is a known fact that taxes are due April 15th. In fact, this is a question on the U.S. citizenship exam. And those of you that have taken my terrorism class know that I make you take the U.S. citizenship exam in that class. And that is one of the questions. This is one of those universal truths. In fact, there are people that kind of mail their taxes the night before, kind of playing, a gambling session with it. You will pay and file your taxes for the previous year. So essentially, if you file your taxes on April 1st, 2020, you're going to file taxes on anything that happened in 2019. So in April 15th of the following year is when that past tax year is due. And many of you have already been working for a long time by now, so this is common knowledge, but some people really are not used to paying taxes. And you're going to pay all kinds of taxes. You're going to pay income taxes. You will pay taxes on large purchases or large expenses. We have homestead taxes, right? We have sales tax. We have payroll taxes. We pay taxes that have to do with marriage, taxes that have to do with babies, school taxes, community college taxes, taxes for new businesses, right? So again, if this is a very unfamiliar world for you, then it's important to kind of start getting more knowledgeable about it, because people often lose out on tax return money because they don't really understand taxes. So one of those wonderful worlds of a functioning adult. These are the federal income tax brackets as of 2019. So I'm going to move myself over here because we already said the year. So again, this has to do with all kinds of factors. Are you a single person? Are you considered head of household? Are you married, filing jointly, or a qualifying widow? Are you married but filing separately? This depends on how you're going to claim your income and how you're going to claim the dependent people living in your household. Okay, so the more money you make, the more taxes you pay. This is what we call a progressive tax rate. Okay, and that varies depending on how many people are filing and who's dependent on who. Okay, so clearly if you're in poverty, you're not going to be paying a lot of money, but you don't have a lot of money to begin with. But this kind of equation definitely will keep people staying in certain income brackets because they'll tip the scale right around this range. So between the 24 to 32% range, that is a huge, huge jump in federal income tax. Okay, that is basically the single biggest jump is going from 160,000 to 204,000 as a single person, right? And anything in between. So there are people that will desperately do everything they can to try to lower that taxable income to avoid the 8% hike on their taxes. That's a significant part of your income. Okay, the other biggest hike, and actually this one's even bigger, is when we start actually moving from low income into middle income, going from 12% to 22%. That's another huge hike, right? So this is kind of the tax that a lot of people pay as they start earning real money out of college, or they get promoted into new positions that have higher earnings. That's a rude awakening to have to pay that much more in taxes. Okay, so these are things you want to keep track of when you're hunting salaries and positions, to not lose track of tax brackets that are going to apply to you. Now clearly, remember economics, it's not really straightforward. It builds, okay? So you pay 10% of your first $9,700 and 12% of the next chunk, which is actually $29,744. And these change each year. So using our average starting salary less to calculation to our federal income taxes is going to help you determine your bracket, okay? In addition to federal, we have state, right? Depending on where you live. So a few other things to keep track of. The income split point, right? People that live in the top 1% versus the top 5%, 25%, or 50%, or people that are in the bottom 50%. So these kinds of tables are really, really good to think about as far as what kind of share of my income is going to be paid in federal taxes, okay? So don't let this be foreign to you, but I'm just showing you some of these things so that you can kind of wrap your head around it. I don't make $2 million, okay? So I don't qualify for the top 1%. And what is their adjusted gross income? And what kind of tax rate are they getting, right? So you kind of look up and down in each of these columns and you can start to see what those tax burdens actually are, okay? Then we get into determining your taxable income. How would you actually know? So we have universal language called single standard deductions. In 2019, it was $12,200 if you were single. If you have other expenses which can be considered tax credits, that you can actually file individual deductions. And basically the rule of thumb is if it adds up more than what the standard deduction would be, then you can take the larger of the two. And often deductions have to do with things like purchasing a home. That's a really big deduction you can make on your taxable income. And then also large medical bills. And even employment expenses, if you have substantial ones, can be qualified deductions. So if we have to calculate our taxable income and the federal taxes we would pay, then you get into something like this: tax credits and other deductions. So essentially a tax credit is paid back to you when you file your taxes. Okay, we call these returns, right? So basically when you pay your taxes, you're giving the government a little bit of a loan. Okay, now does the government actually need your money in a loan? Not necessarily, okay? They can generate funds and essentially print money as they need to, and many other countries can do the same. It's kind of a wake-up call to hear that. But if you study monetary policy, you know that this is actually true. However, there is value to having cash on hand or paying back debt and that sort of thing. So that's why we continue to tax, okay? So for example, if you only if you make under a certain amount must you follow a phase in the program. So you have to think about deductions such as interest paid on your student loans. You can deduct that. So that actually lowers your tax burden of your overall taxable income. We have things called lifetime learning credits that you can get. Every dependent person that lives with you, whether that's a child or an adult that qualifies as a dependent or someone that basically owes their quality of life to you, is a dependent, and you get deductions for every person that depends on you. You certainly have the IRA, you have retirement, there are a lot of other things that you have to think about. So an IRA is basically a retirement account, okay, and you are taxed differently based on money you're setting aside for yourself later. So we have different kinds of monetary instruments for retirement. We have the Roth IRA, which is basically money put away for retirement after you pay your taxes on that paycheck. Okay, that qualifies for a deduction. And we have things like 401ks and 403bs. These are special retirement accounts that hold your money. It's money put away before taxes are paid on it, on your paycheck. And so you get credits under certain annual gross incomes, but it kind of varies depending on the situation. So there are credits and deductions you get based on how you're using your money and incentives that people give for purchases that you make. Those are the two big takeaways. But yes, taxes are complicated, and if you're struggling with this, it's not bad to hire a professional to help you navigate it, especially for the first time and if you're doing it on your own. So then we talk about things like tax withholding. When you're young and in your first few jobs, you will definitely make this mistake where you don't withhold enough taxes and then you end up having to pay because you haven't paid enough through your payroll deductions. When you start a new job, you choose 0, 1, or 2 for withholding. This determines the amount that you get to keep during the year. If you're single with no dependents, then you should select 0, because this means you will pay the most taxes throughout the year, but then you won't have to pay any at the end of the year. So the whole key is making sure that you're paying your fair share of taxes and that you don't end up paying too few of taxes and then suddenly have to come up with this big lump sum and this check you have to send the IRS because you didn't have enough money withheld from your paycheck each week. If you choose a 1 or a 2, you will pay fewer taxes throughout the year, but then when you file, you may owe taxes if you don't have the proper deductions. Again, further questions you want to handle with a tax professional that can help you determine what you should select when you fill out your W-4, which is a form to say, hey, how do you want your money handled as we apply taxes to your payroll? And it's very confusing if you've never filled one of those out for the first time. So again, consult a tax professional. Other taxes. We have state income taxes. These are the states you do not have to pay. Florida, yay! Florida, Texas, Alaska, Nevada, Wyoming, New Hampshire, South Dakota, Washington, and Tennessee do not have state income taxes. So if that is one of your destinations after you finish at University of Florida, congratulations, you're paying fewer taxes. However, some of these places actually subsidize state money from other sources, like maybe having to pay higher sales tax or things like that. So you have to kind of keep your eye out for that. You pay your state taxes first before you actually calculate your federal taxable income. I've lived in plenty of states that actually have state taxes, and again, according to this list, most other places you live, other than these, 1, 2, 3, 4, 5, 6, 7, 8, 9 states are going to have state income tax. It generates money to support state and local initiatives, things that are like state roads and state education and those kind of things. You'll also pay property tax on homes you own, and other things like boats, cars, even jewelry, airplanes, computer equipment, tools, furniture. You'll have to pay taxes on specialized goods like that. And if you don't believe me, just go to the Department of Motor Vehicles and you'll have a whole area that you handle the taxes on that vehicle, if you've ever bought a car before. How can some states afford not to collect state income tax? Well, it has a lot of reasons, right? Sometimes it has to do with tourism, or it has to do with sales tax, or they tax you higher on property taxes. So when I lived in Texas, that was the rude awakening I experienced, was my property taxes were about 3 times higher than they were in the last state I lived. So instead of maybe paying around $2,000 for property tax on my house, I was paying closer to $4,000 or $5,000. So they get monies from different sources. So you have to kind of keep a lookout for that. These are the top state marginal individual income tax rates in 2019. Okay, so again, the darker the state, as far as closer to red it is, the higher the individual income tax rates were in that state. So again, that's why you're seeing people on the coast complaining about higher tax rates and people kind of more in the middle of the country not doing that as much. But these tax rates are also attractive to employers to move their businesses there because they know the cost of living will also be affected by their employees. And so it can be very attractive to have their business located there. So again, just more food for thought to think about income tax rates and brackets. And it's not a bad idea to kind of look at some of this because taxes are one of those things you will have to pay. And that's just how life goes. Finally, to kind of round things out, again, combined state and average local taxes, and this is sales tax. What is your tax burden? The darker the purple, the higher it is. The lighter blue and green, the lower it is. So again, looking at this chart, you're going to see how it affects your cost of living as far as how much in sales tax you're going to pay, state tax you're going to pay, and it also helps you identify which states are more dependent on sales tax and on state tax, okay? And then you have some states that obviously are not charging that, right? So some states don't have sales tax, okay? Very few. Most of them have some kind of sales tax. Okay, finally, just a few other financial takeaways, and you're like, hey, this presentation's been mostly financial. I thought I was going to learn about dinner etiquette and what kind of cut of meat to order or how to navigate white wine and red wine and how to use the, number of forks that are on my table. Clearly, those are other lessons that are about etiquette and impressing your company and making a good impression and stuff that are also really, really important. But I thought the financial stuff was probably top of your list. So this is the very last part we'll talk about. Things or tips I wish or I knew or I listened to before I left college. Paying off your student loans ASAP. These will follow you until you are dead. Okay, so you need to get these paid off. And again, there are all kinds of programs that can help you do that. There are programs called income-based repayment programs that can make sure you're not completely buried by student loan payments. You have public servant loan forgiveness, which will help you make reasonable payments and then have the balance forgiven if you work in certain industries. So look up public servant loan forgiveness if you want to know more. It's PLSF. So those are different ways to pay off your student loans. But again, make sure your student loans are reasonable and create a plan for paying them off. And there are all kinds of strategies for doing that, but they are going to follow you forever. And if you have too high of student loans, it's going to affect your credit score, which is ultimately going to limit your purchasing power. You may or may not qualify for a mortgage or a car if you're looking for financing on those kind of things. So you don't want your student loans to cripple you out of getting a house. Do not carry credit card debt, okay, or credit on credit cards. It's okay to establish some credit if you're trying to actually get a score and you don't really have much of a score because you haven't used credit. But interest is really the deadly money drain. You will never get that money back. It's clearly money you're giving to someone else in order to use their money because you're not using your money. So don't give away your money for free by paying interest, okay? And you'll want to also negotiate interest on things like student loans and housing that you have to pay because nobody just has $200,000 to $400,000 laying around for their first house. You will have to borrow, okay? If you want to buy a house, you do need good credit. So again, don't sabotage yourself by those credit cards or too high of student loans. Most people need a minimum of at least 3 to 7% down, depending on the type of loan you qualify for. A common one is called the FHA loan, which is for first-time home buyers, which has a minimum of 3% down. But you will have to pay mortgage insurance until you pay off 20% of the loan. we don't like doing that, right? Because again, we're paying to use other people's money. Why do we pay mortgage insurance on loans when we don't have a lot down and we're a first-time home buyer? Because it's a guarantee to the bank that you won't default on your loan if things get tight for you being a new homeowner and having kind of maybe a lower income. So basically, they're not going to take that insurance off or that little fee you have to pay in addition to your mortgage payment unless you've paid off more of the loan and demonstrated that you're going to be able to actually make your payments. Okay, but again, get your house payments reasonable to your income. Make sure you think about how many years you're using. You can finance homes for 5, 10, 20, 30 years. And in Hawaii, you can finance them for 40 and 50 years. Should you try to finance a home for 50 years? I don't know, but I think that would be rough because basically you're buying your coffin, right? You have to think about, am I actually going to pay this off? Is this a good idea? Can I refinance later, maybe into a shorter term of my loan or a better interest rate? Those are possibilities, but realize you have to pay costs and fees over and over again to do that. Things like closing costs, which can easily be around $10,000 to $15,000 just to get a better interest rate. But if you're going to save that much money down the road and $10,000, $20,000, $30,000, $40,000, it might be worth doing. So again, consult professionals when you consider doing these things to save yourself some money. A good down payment is actually 20% of the purchase price, and then you don't even have to pay the mortgage insurance to use somebody else's money. You can just start paying your mortgage. But then you need things like homeowner's insurance in case something happens to your home, just like you have with car insurance. If something happens to your car, you have a way to cover it. Same thing with your home. You should have insurance on big purchases and things that you would have difficulty replacing. Okay, it's a good idea. And usually insurance is not terribly expensive. It's pretty manageable, but it will cover those losses that are going to be really, really hard. I tell people when you go to shop for insurance, you're basically buying a product that's going to cover emergencies and cover things that you wouldn't normally expect to be able to cover. So you're paying for a reasonable way to cover an emergency. You're paying for the unexpected. And so you can't possibly predict what's going to happen to you in the future. So things like health insurance, car insurance, home insurance are really, really important. And it's not a bad idea to kind of learn about different kinds of insurances than some that might be more appropriate for you. A lot of HR departments will do this in your first job, but it also really pays to know what you're signing up for. Start keeping track of important documents in a filing cabinet or a folder or electronic cloud storage or drive or whatever you're doing. So that way, when you need to actually apply for these kind of things, you've kept track of all of that. So again, just some things to really, really help you with navigating some of these big financial complicated things in life. There are certainly a lot more out there to have to think about and consider. And this is not a replacement for sound advice from financial professionals, but it will give you a good running start to kind of consider some of what's going on. So hopefully you found this helpful, and we'll see you next time.